focus, let's also take a quick look then at the events that you should then be watching out for. And on the back of futures and options inclusions, you do have NBCC, Phoenix, Solar Industries, India, as well as Torrent Power that will remain in focus. And in terms of other cues to watch then, you have inclusion of Indian bonds coming in the Bloomberg Emerging Markets Index, so that will remain in focus. And from India, you do have the economic survey, so keep an eye on that as well. From the US, of course, there's PC inflation data, and that will also remain in focus, like I mentioned earlier. And in terms of earnings, then 4 counters to keep an eye on in terms of earnings, then Nestle India, ONGC, Sun Pharma, IndusInd Bank, like you can see on your screens as well. And in terms of corporate action, then keep an eye on IGL, because that's the one that's going to be trading ex-bonus in the ratio of 1:1, and it's also the last day to buy shares to be eligible for dividend for Torrent Pharma. So even that one is going to remain in focus, and the lock-in period, of course, it's ending for Swiggy. So keep an eye on that one as well. But on that note, let's kickstart our coverage with news flow then coming in from the United States. GDP growth in the fourth quarter grew at a pace that was slower than expected. In fact, GDP, which is a measure of all goods and services produced, showed an acceleration of 2.3% coming in on a year-on-year basis. Now, estimates were hovering around the 2.5% mark after the 3.1% growth in the third quarter then. In fact, the growth print closes out 2024 on a downbeat note for the full year growth that stood at 2.8% versus the 2.9% that was being marked out for 2023. Goes without saying that growth was largely led by brisk spending from consumers despite lofty prices of everything from homes to cars to eggs, you name it. But moving on then, the European Central Bank has also cut its deposit facility rates by 25 basis points down to 2.75% now. And the rate cut was expected by investors. The main refinancing rate was also cut by the same quantum then down to 2.9%. In fact, the ECB has still not committed to a rate cut path for the year then and is waiting for inflation to sustain at the desired 2% level. So that's the latest coming in on that front. In fact, on that note, let's go across and listen in to the word then coming in from ECB President Christine Lagarde.
The economy stagnated in the fourth quarter, according to Eurostat's preliminary flash estimate. It is set to remain weak in the near term. Surveys indicate that manufacturing continues to contract, while services activity is expanding. Consumer confidence is fragile, and households have not yet drawn sufficient encouragement from rising real incomes to significantly increase their spending.
There is no earthly reason, and I think no reason why the ECB would stop at this point, given where inflation is and given where rates are. And I think to map out where they're going to go over the rest of the year, I think will be quite interesting. Now, the Fed's dot plot is 2 rate cuts in 2025. I think that's going to be pretty hard to do at the moment, given the economy, given inflation, given the uncertainty about Trump's tariff and tax cut policies. So I think all of this, and I know that you didn't particularly ask this question, but I think all of this probably is going to put downward pressure on the euro against the dollar, and that's been my call for the year. So I think the ECB will push the thing in that general direction anyway, by almost certainly highlighting there is much scope for more rate cuts still to come in Europe.
All right, then that's the word coming in from Geoff Dennis then. But it's time for a very quick breather on the show. When we come back, we'll get you a check going on what the Asian markets are doing. But as we slip into a very short break, take a look at some of the handover then coming in terms of the earnings fine print from across the globe.
If you like this video, then like, share and subscribe to ET Now.